October 10th, 2025 crash and gold. Hey everyone, it's Wolfgang. So yesterday, October 10th, Friday, there was a correction slash crash in assets that are traded by the public. So I want to discuss that. There's some good news and there's some not so good news in the results of that crash. So let's take a closer look at what happened. The cause of the crash, to begin with, trade disagreements. Trade disagreements have been going on since trade started. Countries can come to loggerheads and have disagreements. The two biggest economies, China and the U.S., are sort of at loggerheads right now, big disagreements. This is starting a new period of no or low cooperation between the two largest economies. These are the two largest economies in the world right now. So the crash, S&P 500 crash, it fell 2.7%. That may not sound like a lot, 2.7% drop in the S&P 500, okay, index, but that was the biggest drop in the past 6 months. So it hasn't fallen this much in 6 months. So that's fairly noteworthy. However, the good news, the S&P 500 is still up over 10% for the year for 2025. So we've had the biggest correction in 6 months, but it's not really a correction. It fell, a setback. Biggest setback in 6 months, but we're still up on the year over 10%. Pretty darn good, especially when you consider that, with an average of 3% inflation, your money, if you don't invest, loses about 3% of its value every year. We're up still over 10% on the year with the S&P 500. The S&P 500, pretty, it's a pretty low risk, somewhat low risk way to invest in stocks. You still have market ups and downs, but market exposure over the long term can be a good thing. So the past 2 years prior to this year, the S&P 500 was up 20%, more than 20% each of the past 2 years. So 20% in 2023 and over 20% in 2024. And we're over 10% so far this year. So this is a pretty good run for the S&P 500. So yesterday, Friday, stocks reversed a little bit, the biggest in 6 months. Bitcoin, BTC, I would call that a crash because on October 9th, on Thursday, 2 days ago, BTC was over 125,000, right? 2 days ago, 48 hours ago. Okay, yesterday, 24 hours ago, it fell to 102,000. That's a big drop. That's a 19, almost 20% drop in Bitcoin. And if you compare that to 2.7%, it's almost like the S&P 500 is, big deal. 2.7%, I'll take it, right? 19% was a big drop. And the bigger problem is across the entire cryptocurrency marketplace, not just Bitcoin, 19 billion, it was over 19 billion in losses were incurred in the cryptocurrency marketplace overall. Bitcoin, Ethereum, ETH, XRP, Solana, all these cryptocurrencies really took it on the chin yesterday. 19 billion in crypto losses. Okay, that's a lot more than the S&P 500, a lot more than stocks. Let's compare that to gold because we're taking a look at the market crash in gold. This is some good news. If you're a gold holder, gold reached over 4,000. It got up to like 40, 25, 40, 30, 40, 35, over 4,000. Yesterday, it fell back to 4,000. Big deal. So gold was an extremely, extremely good hedge during yesterday's crash, yesterday's setback for crypto. Crypto did not do so well. So this is a little bit interesting, okay, because a lot of people have talked about crypto as being the digital version of gold, digital gold, and yet they behaved radically different yesterday. Gold was a very good hedge. The crypto marketplace lost 19 billion total, over 19 billion actually. So gold held up very well. Okay, so S&P 500, the crypto market, and gold. Okay, so this is what happened yesterday with those three types of assets. Okay, Binance, the exchange, is offering, they're offering to reverse some of the losses for their customers. They've said your losses will be reversed. We will cover you for losses you took in crypto. Okay. this is a wait and see as far as I'm concerned anyway. It's my opinion. I'll believe it when I see it because 19 billion in crypto losses, how much of that was on the Binance exchange? I don't know. Will they be able to restore most of it? No. In fact, this is what Binance said. Users who experienced losses from Binance platform latency issues will have their cases reviewed individually. In other words, Binance is saying if you lost money, we will look at this on a case-by-case basis to see if you qualify for reimbursement. So they're not making a blank check commitment to restore everyone. They're saying we'll take a look at your case. So plead your case and we'll take a look at it. So that's why I say it's a wait and see if Binance actually follows through with any sizable restoration of assets, holdings in accounts for their users. Okay, so one of the other fallouts from the cryptocurrency market calamity yesterday is there was a failure in one of the stable coins. Okay, stable coins are pegged to the dollar. They're supposed to make it easy in the cryptocurrency marketplace because they're pegged to 1-to-1 in the US dollar. So US dollar Athena fell to 66 cents. Not good. That's not freaking good. Stable coins are not supposed to, they're supposed to keep their peg to the dollar. Okay, US dollar Tether is based on, bank accounts, legit, normal, rational, asset stores that people generally accept. Whereas US dollar Athena was built on the Ethereum blockchain and is based only on other crypto assets, not on fiat money or bank account deposits or anything. So I suspect the fallout from this 66 cents, it's supposed to be a stable coin. It's supposed to be pegged. It's supposed to keep its peg to the dollar. That's not a stable coin. So the credibility of US dollar Athena is shot. Just shot. I mean, that's a huge drop. That's 2/3 loss, right? So that's not a stable coin, at least not in my opinion. Not that we're used to when we talk about stable coins. We don't talk about a loss of 1/3 of the value of the stable coin, except in this case. So this 19 billion plus in the crypto marketplace loss has surfaced or exposed some things that were not expected to occur. Okay, now I couldn't fit everything on the board, so there's a couple things I want to talk about. I want to compare assets. We had a reversal in markets yesterday. Some markets reversed more than others. Okay, so I want to compare assets. Let's compare gold to the S&P 500. The S&P 500 lost 2.7% yesterday. Gold, it really didn't lose. It lost next to nothing. Gold held up better than stocks. That's a good sign. That's kind of expected for gold. Now, another asset to compare, real estate to the S&P 500. Okay, the S&P 500 corrected yesterday. How did real estate do? Okay, so on average, 3% increase for real estate per year is typical. 3% annual increase on the value of real estate. It goes up and down depending on the real estate market, obviously, but over the long term, a 3% increase in value for property. S&P 500 average about 10%. So people say, I really like real estate, but the S&P 500 kind of smokes it over the long term, 10% versus 3%. Okay, so let's compare just strict fiat currency, US dollars, keeping it under the mattress or putting it into the S&P 500 over the long term. Okay, we're going to look at the year 1970. We put $100 under the mattress in 1970. That was 55 years ago. Okay, and we're going to compare that to taking that same $100 and buying the S&P 500 in 1970. So in 1970, we put $100 under the mattress, and we took another $100 and bought S&P 500 stocks. 55 years later now, from 1970 to 2025, what do we have remaining? Okay, so what is inflation generally? About 3% a year. You lose about 3% the value of your money each year. If you've got it under a mattress, you're just losing 3% per year. Okay, so if you take, in other words, 97% of the money under your mattress you still have at the end of the year. So if you put $100 under the mattress in 1970 At the end of that year, you have 3% less. You have 97 bucks, right? If you keep doing that, a 3% loss per year for 55 years, this year, your $100 under the mattress is now worth only $18.72. We put $100 under the mattress in 1970. Right now, that has been cut to $18.72 of value. Okay, if we invested it instead in the S&P 500, 10% return, we have $18,906. We put $100 under. Sorry, we put $100 into the S&P 500 index, an ETF, in 1970. Now we have $18,906. So you put, if you're saving money at a low rate of return, like in what banks are paying now, which is like 0.01%, you're basically putting money under the mattress. You're losing 3% a year. You can do that, or you can take that same money and buy an S&P 500 ETF, which is something we always recommend. We don't recommend individual stocks. We recommend the S&P 500 ETF. $100 in 1970 in the S&P 500, now worth $18,906. You get that by taking 1.10% return per year and raise that to the 55 power, an exponent of 55, because 1970 to now is 55 years. $100 becomes $18,906. So gold and crypto over that long a period of time, 55 years, a little bit of a different story. So I'm not going to go into that now, but you can look that up if you're curious. Cryptocurrency has not been around long enough, but gold has. Gold is an interesting story between 1970 and now. You might want to have a look at that. If you have any questions about any of this, if you're a crypto holder who lost out big time, what I tell people when I talk to them about this is, holding in reversals is common in the crypto industry, and people are going to hold. They're not going to care. What if it falls down to 5,000? Are people going to hold? Yes, they're going to keep holding, right? That's just the nature of the crypto market. But some people actually got wiped out, had their accounts zeroed out. Yesterday, this over 19 billion in crypto market losses really hurt a lot of people. And if you're one of those people, I'm really sorry that happened to you. I know that's a bummer. And it can become part of the learning process of investing. If you lose a big chunk, it can help you understand that diversifying is not such a bad idea. So if you have any questions, please post questions in the comments. I'd be more than happy to answer any questions you have. I really want to thank everyone for watching, and have a great day.